Hi guys, welcome back to this series on interest and depreciation. So the next topic we're going to be looking at within this series is going to be the topic of income tax. So what is income tax? So basically, because governments need to pay for things like, roads, armies, government employees, all that kind of stuff, they need some kind of way to pay for it. One of the ways they do this is by taxing the income of everyday people like you and me on their income that they earn, so through their wages or through their salaries. So there's definitely other ways that the government can tax you, such as, capital gains when you sell a stock or you sell a house for more money than you bought it for. There's things like GST on foods and little things, so you pay a 10% tax on top of things you buy. And there's many, many more of these different kinds of little taxes, such as taxes on alcohol, cigarettes, things like that. But income tax is the one that the government earns from everyday people like you and me, because businesses and other corporations pay different kinds of taxes. So because Australia believes that those who earn more money should pay more tax and those that earn less money should pay less tax, we have something called a progressive tax bracket income tax. So depending on how much you earn will depend how much tax you pay. So although tax rates can change, especially when you have a change of government, these have been the current tax brackets for a while now in Australia. So as you can see in this table here, you can see that the minimum tax bracket is you start paying tax once you earn over $18,200. And then every time you skip into a new tax bracket, you're going to pay more money on every dollar extra that you earn over the threshold. So if I earned, for example, $19,000, I would only pay on all of the dollars over $18,200. So I'd only pay on 800 of those dollars, and that's the same thing for each of these tax brackets. So as we can see here, these 19 cents for every dollar, that's basically a percentage. So the lowest tax bracket we have in Australia is 19%, because we're paying 19 cents in every dollar. Then it goes up to 32.5%. then 37%, and then the highest tax bracket is 45%. So for every dollar over this amount, you're going to be paying 45% in income tax. So that's a lot of money getting paid to the government. So another important concept that you're going to need for this topic is understanding the difference between gross pay and net pay. So a good way that I like to think about this is gross, because gross means big in German. That means it is your big amount of pay, so without anything being taken away from it. Whereas your net pay is your pay after you have had things like your tax and your deductions taken away. So what your net pay then equals is it's the same thing as your gross pay, which was your pay before any of your deductions, minus after the tax, and then after any other of these deductions. So some of these deductions, for example, can include things like extra contributions to your superannuation or your retirement fund. And these are usually the things that the government doesn't want to tax you on, because they want to encourage more of it. So the last tax we're going to sort of have to be aware of here is a different type of income tax, and this is going to be the pay-as-you-go or PayG tax. So basically the PayG tax is a set amount that your employer, or the person who's paying you your wage or salary, will automatically take out every time you get paid. And the reason they do this is because it makes it a whole lot easier for them to calculate how much tax they should pay, rather than have to calculate all your deductions and all the complicated stuff, because they probably have a lot of people that they need to pay the tax for. Now, a lot of the time that means that the employer can pay too much, and you'll end up getting what's called a tax refund. Because you pay too much tax, the government will then, on your tax return, give you some of the money back that you paid to the government.